things just have gotten beaten up too much?
Well, there are a few things. First of all, your statement's incorrect. It's not because people are on vacation. There's been volatility throughout the year, and actually more volatility earlier in the year when people weren't on summer vacation. So I think it's a great thought. When people come back, calm will come back into the market. That's just not going to be.
It may or may not. I know, but it is easier in some respects.
Yeah, but markets can go up. Markets can go up on low volume.
When volume's down.
Markets can go up on low volume too.
Of course.
That's sensible.
I mean, it's easier to push them around.
Not when the signals are negative. Not when the signals are negative. Most of the signals, you have yields backing up. There is no model that I know when yields come in that says we want to be a buyer of markets.
Exactly.
Okay.
And thank you for making my point. So the volatility is caused by the news, not by the lack of people in the seats.
Right.
And in terms of the yield curve inverting, that's because there was the flight to safety. And with now the dialogue turning a little more positive, maybe just from the absence of bad news, that's why bonds have been acting, have been selling.
Which market is going to rule the day? Is it the Walmart Nvidia market, or is it the Cisco Deere market?
You know, it's always the Walmart Nvidia, but it's whoever the Walmart Nvidias are at that moment in time. And so to say it's a tale of two cities, to me, as a value investor, as a dividend investor, I actually wrote 2 years ago or 3 years ago in a market letter, it's a tale of two cities, where I was the loser in that as the value investor. There's always going to be the winners, so yeah, you want to be in them, but there's a huge difference between Walmart and Nvidia. It's just figuring out who those are.
Part of my point, though, is which are investors going to focus on more? The brightness of the consumer, or the dimness of what's happening because of trade?
How about stocks versus bonds instead of that argument you're making? We have a bond market that's pricing extreme volatility and a stock market that's actually acting fairly normally from a volatility standpoint, down 5-point-some% from its high. But the bond market is indicating some stress, and I would argue that might be a false positive. And the reason it's a false positive is because it's structurally based from some of what you're seeing overseas. So I don't know that it indicates an underlying tension, especially as it relates to U.S. markets. It is forcing the hand of the Fed to potentially deal with some agita that's happening overseas and slow growth that's happening overseas, and therefore our markets are starting to price in a lot of cuts, which is a bit baffling to some investors. You have guys that we know and respect, like Rick Reeder, coming on and saying we need a 50 basis point cut, and that will kind of quell the day. I am not so sure that that's exactly what we need. I think we need some fiscal policy. I don't know that we're going to get that right away because the election's still a ways off.
With a deficit that's nearing $1 trillion, please.
We should. But it's going to be. What I'm more talking about is trade policy. Okay, I think we need something positive to break on trade, and I think that won't happen right away.
All right. So in answer to your question, those Walmart and Nvidia are both on the same side of the trade, which is more consumer related. Definitely Walmart and a lot of Nvidia.
That's why I break it out the way I do. It's the consumer good versus business and the trade-related stuff bad.
And consider
which is the market going to fixate on in the weeks ahead, the good or the bad?
It's going to fixate on the good because the good is 70% of the U.S. economy until you get another tweet that focuses on trade.
I mean, look, consumer sentiment today, Michigan was down. And, somewhat substantially. It's still in the 90s, but
92 versus 97.
You can't have the consumer start to get worried. That's a game changer.
That would be a game changer. And, right now the consumer's feeling pretty good, as evidenced by most of the earnings that we've been talking about on that consumer side. Some mall-based retailers, not so much. But, Scott, I would point out, at top of the show, the voiceover gentleman was talking about, the massive moves in the market this week, and they certainly have been, so I'm not making fun of that. But what I am going to point to is, and did we bottom, for instance, yesterday, and a week ago when I came back from vacation, I was telling you 27.85 to 28.25, that's the range. One was a pre-market, one was the regular session, roughly low. And I said, yeah, I think those are tradable bottoms. The reason I say that it has proved out to be that, again, question of the voice, is that yesterday we had 800 points of movement in the market before the market opened, before, the regular session opened. Between the 250 up, 180 down, back to unchanged, up 150, down one, all of that. So I just want to point out that the vol never got up yesterday. Volatility didn't get up at all, despite all of that. Yeah. So that tells you that somebody thinks we were defensively